Great. Well, look, thanks very much. Thanks very much for having me, and thanks very much for being here. I'm going to sort of moderate a panel on something that we've written a huge amount of research about over the last few years. I don't think there's a mining conference that goes by these days where the topic of electric vehicles and its impact on the demand function, doesn't go by. Certainly, if you want to get readership up as an analyst, you add the sort of title. You add electric vehicle plus Amazon plus disruption into your title, and that's the sort of clickbait that everybody's looking for. But maybe just to sort of kick it and open it off. I mean, Gianni's obviously an expert, has written a huge amount on this topic as well. But to try and dimension just how important this is for the copper market. Electric vehicles, everybody thinks about lithium, lithium ion. Then they think perhaps about cobalt. Maybe if they think a little bit further, it's nickel. But copper, just how important is this for the electric vehicle story for copper demand going forward?
I'll give you some anecdotal information, and I think this is very important as to the underappreciation of what makes this stuff, the utility of it. I will suggest to you that the greatest gathering of energy mines in the world takes place in Houston, Texas. It's early March. It's called Sarah Week, and it's hosted by Daniel Yergin. He wrote The Prize, The Quest. He's featured with the Economic Forum in Davos and so on. 48 plenaries, the who's who of energy. And they invite the oil executives, the ministers of OPEC and what have you, the power business, the integration and distribution, and now they're inviting technology. And they talk about this and they argue about this disruption, which is going to be consumer driven, but we'll talk about that later. It all ends in the long course of time as electricity. We all know that. You can argue how long that will take. 48 plenaries, the who's who of energy. The word copper is not mentioned. It is entirely underappreciated. So to talk about the simple application, it takes 4 times more copper, thereabouts, to make a fully electric car possible. It takes more than that to have a fully electric bus. And then there's the associated infrastructure to build what will be, in the end, tens of millions of charging points around the world. The CEO of Shell, Mr. Ben van Beurden, he is now going through their scenarios, which are a little bit more ambitious, and he says that about 20% of the world's energy system is electricity, 80% is the incumbent energy mix. And in the next 50, 60 years, it will all end up as electricity. We know how much copper has been mined since the last 120 years, which went into the world's electrical system. If the other 80% of global energy is going to end up as electricity, where will this copper come from? I will suggest to you that we in mining, of course, we follow this like Harlequin romance, but it is entirely misunderstood, underappreciated, and for that, I think it's one of the great stories that will end up on page 1 of every publication as the Achilles heel, the keystone, the magic ingredient that makes the decarbonization of the global energy mix possible. It's the enabler.
I mean, maybe just to follow up with some of those, those numbers that Gianni was mentioning. I mean, the kind of figures that often get bandied around are that it's about 20 kilograms of copper per conventional internal combustion engine at the moment. For an electric vehicle, depending obviously on power and range, you can be talking 80, 100 kilograms of copper. You then start adding on the copper that's contained in the associated infrastructure, charging points, distribution, generation, and storage, a topic we're going to be sort of touching on. You can multiply potentially that number by a factor of 1.5, maybe even 2. But then to sort of put that in context, if you take the sum total of all copper that has been pulled out of the ground from the very inception of human history to date, and you ask, well, what is that on a per capita basis? That's about the same number. So the mining industry has, from year 0 to date, pulled out on a per capita basis for the developed economies only, some in the region of 150, 200 kilograms per person. And what we're talking about is a single demand application that may replicate that over the course of just 1 generation. So the magnitude, certainly from our perspective, of that kind of demand shift is really, really shouldn't be underestimated. The language around lithium, around cobalt, fine. These are small markets and therefore a relatively modest increase in demand in percentage terms looks significant. But the absolute volume that you're talking about, for us anyway, undisputedly, is copper is the winner.
So, Paul, I actually think it's much bigger than that.
You think it's much bigger than that?
Yeah, and the reason is
Well,
because,
then you're the only person
because
more
you're only
pollution than
looking
copper.
at you're looking at just from the battery point of view, and from the electrification of the automobile. I mean, the reality is we're going through a revolution in the energy space. I found it very interesting last week. I looked at two reports. One was from the IEA, and the other one was from Bloomberg, and they were predicting what was going to happen between now and 2040. Now that's 20 years away, so it's not a long way away. And I could not believe how different they were. So one of them was talking about, the IEA was talking about an increase in coal usage over the next 20 years. And the BNEF, Bloomberg, were talking about a decrease by 60% in the usage of coal over the next 20 years. Now, that is not, I'm a former analyst, so I look at this and go, no, we all try to sort of go to consensus. That's not consensus. And I'd ask, well, why is that? Well, the reason is because there's a revolution in the energy space. And why is Bloomberg coming out and saying this? Because they're actually saying, I'm sorry, but 40% of our energy by 2040 is going to come from solar. And we're going to have batteries in the system, we're going to have intelligence in the system, and coal we don't need. So I would just make the point to all of you in the room is that when we talk about mining, it's actually the whole resources industry is going to be really radically changed by the changes going on at the technological level in and around energy and transport.
Yeah, look, I mean, if that is the case, I mean, then that, I mean, and not that I'd wish to dispute that, but I mean, that's a staggering transition. I mean, but then sort of, again, to contextualize that 20-year horizon, right? I mean, how long does it take to build new mine supply in the copper industry? If you look from first sort of exploration success to first tons coming out of the ground, and you look at that lead time, and you could be talking about 10, 20, 30 years. I mean, Escondida, discovered in, 1981, first tonnage, 1991, 1992. That was the world's best ever copper mine, as it were. This was at a time when Chile was actively trying to suck foreign direct investment in, and it took a decade. Now you're talking multiples of that. So when we sort of talk about a 20-year horizon, that is essentially the world as it will be tomorrow from a mining perspective. And of course, the issue with that is that the supply-demand fundamentals need to move on that sort of same kind of time horizon. But sort of talking about distributed storage. I mean, this was a discussion we were having just before coming up on stage. I mean, how important do you think that is, as both from the perspective both of the energy complex in its entirety, but also specifically in terms of copper demand? Is that something that is as significant as EVs, or is it essentially a rounding error compared to what electric vehicles will be?
So the question is how we're going to upgrade our grid going forward. And I use a very good example is maybe Australia. What Australia did 30 years ago is that they upgraded their whole distribution network. What that meant was they put in bigger copper cables. And why did they do this? Because demand in the houses in Australia went up because of air conditioning. The result of this was that today Australia has the highest grid charges in the world, and this threatens the whole commerciability of every single utility in that state, in that country, right? Every single one, because they pay 30 cents for their electricity. Well, I can go in with storage and solar today, and guess what? I can produce a solution which is half that in price, okay? And you can see where I'm coming from. Now, why I say this is we have a choice in the rest of the world as we electrify the automobile. If we do it unintelligently, we're going to have to rip up our rolls and put lots of copper in. And that's going to kill the business model of the utility. I don't think we're going to do this. We're going to digitalize and put intelligence in. That means you're going to plug your car in, and the system itself will decide when that car is charged, right? So I think we're not going to use so much copper in the grid. That's my view. But we're definitely, with no choice in the car. There's no alternative in the car itself. We are definitely going to use 40 kilograms of extra copper in the car. There's no alternative to it.
I'll give you a story. The largest electricity company in the world, in fact, it's the second largest company in the world based on turnover. It's State Grid of China. They have 1,100 million customers. It's run by a man, his name is Xu Yinbiao. He does speak English. And last year, many people may not be aware of this, but they achieved electrification for every citizen in China. They're the leaders in the distribution of ultra-high voltage, and they've come up with this 800,000 volt DC system, and the largest line goes 3,700 kilometers. They built 80,000 kilometers of ultra-high voltage lines. There's 30 of them. And they're dealing now with the second part of it. And in Chinese, it's translated literally to the re-electrification of China. They achieved last year in Shanghai province, which has 35 million people, it was 7 or 8 straight days of entirely renewable energy. They did this in a bit of a clumsy way to achieve electrification for everyone. They've installed, as of CERAWeek, they're 170,000 charging points. They have 9 parallel avenues vertically and horizontally to charge cars. They will now go through the curtailment issues, which they have, of course, with wind power and solar power, which we've all seen, and they are the leaders now, no longer made in China, it's innovated in China. They have taken the leadership role from the United States of America, and what will happen in this second phase, of course, is the rapid acceleration in the electrification of transportation. Many of you would have seen Build Your Dreams, BYD, and the 2 largest bus companies in the world are based in China. And as a publicity stunt for the city of Shenzhen, which is effectively 2 Torontos, and then Guangzhou would be like 3, maybe 4 Torontos even, all put together in a 200-kilometer circle, 16,000 buses, all electric. They don't care about the coral reef of Australia. It's particulate pollution, not climate change. This has all occurred basically in the past 5 years. Yep. It will be unrecognizable, I will suggest to you, in the next 4 or 5 years, which is why the per capita copper consumption in China will climb. In the United States, the per capita installed capacity, 650 pounds copper per person. Japan, 600. South Korea, 550. And you are correct. China's now about 170 pounds, 175 per person. And let us put 2 classes in China, the people that are still climbing into the consumer class, and let's say 600 million people are now consumers like you and I. They have the same footprint. This will continue to climb, which is why the 11 or 12 million tons that China consumes will be stable and will continue to grow. Part of that will end up in China. Part of that will end up in your washing machine or your car in Netherlands or Canada or wherever else. They do export many of these things that they fabricate from copper.
But I mean, we touched on the, as you sort of said, the industrial policy as regards electrification. But again, another question that we often get asked, that we often debate, is the motivation behind the move to, for example, electric vehicles. You touch on the environmental concerns, other sort of points about industrial policy, other points around energy security. I hear basically those 3 narratives put to me, almost with equal regularity. I'm just interested in your view. What is, if you had to sort of give a single view of what's driving Chinese industrial policy here with respect to, say, electrification, electric vehicles, what would it be?
Well, I think it's mostly, politics really driving policies in China, and I think it must be really world leadership as well as anti-pollution, and making sure that they continue to be really popular and becoming, leaders in a particular field. Would you agree to that?
Sorry, I agree totally. For me, when you use the word industrial policy, it is an industrial policy, not environment or energy, it's an industrial policy. They have an opportunity to take a lead in the automobile industry, and they already have. You just mentioned the 2 bus manufacturers. I find it quite shocking as a European that you cannot buy a commercial bus from the 3 biggest engine manufacturers in the world, Volvo, MAN, and Mercedes, right? They've been sleeping, okay? The Chinese have not. And, there's 200 EV startups in China. I do work in this area. I think I count 5 in Europe. There's maybe 5 in the US as well. The statistic I got from last month of May is that the Chinese delivered more buses and EVs in that month than the rest of the Western world did in the whole of last year. That tells you everything, right? Yeah. They are going at this quickly.
But politics is important, and politics and energy. And if you look at the British gave up the sphere of influence in the Middle East in the 1930s after the Second World War, and we know the rest is the rest. They discovered oil in Saudi Arabia March of 1938. And Harold Ickes, who was the Secretary of the Interior at the time, he would send America's foremost geologist, Everett de Gaulier, to assess the significance of this geological find. And they reported back, "Sir, you don't understand. This is the single greatest prize in all of history." So if I embellish a map for you today, if you look at all the countries that export oil, the more oil you export and the higher the value of that barrel of oil, the bigger that country becomes. Of course, we see Saudi Arabia, Kuwait, Iran, Russia, Venezuela. China doesn't exist. India, Germany, Italy, they import fossil fuels.
True.
I will suggest to you they have no interest in that. It was difficult to make that transition in decades before, but a country like Japan, which has no natural resources, they now can have a plan over the next 5, 10, 20 years where they will import less of those products. This is exactly what China is doing. Their energy independence comes by way of innovation. They need to be able to, and of course they will sell this system to the gringos around the world, the Belt, the Road, and elsewhere. And that's my opinion. I think there is a very important politics in this.
But then sort of tying that together, I mean, what the reality that we see on the ground here, for example, in the Congo, is, you know, where angels fear to tread, the Chinese apparently are prepared to take on that sort of geopolitical risk. We see integration backwards into the sources of primary sort of raw materials. We see them buying up cobalt assets. We see them buying up copper assets. We see a desire to sort of integrate the sources of raw material into that broader industrial policy and into the supply chain. You know, do we see the Western majors sort of doing the same? Will they do the same? You know, how do we see OEMs responding to that challenge, given that perhaps, you know, how many years are they behind the starting gun? 3, 5 years? Where do they go next?
I think they're firstly in a panic mode. Why I say that is, I used the example of Daimler last year. Daimler became the largest venture capital investor in the Western world. They spent $1.5 billion in investments in companies. That means you're like a machine gun. That's not very precise. And that tells you a little bit about their view of the future. There's panic there, right? And the stories I hear, and please give the example of Volkswagen, is that Volkswagen has tried to sign up cobalt on a long-term contract for the last 2 years. And walking into Glencore and sitting down with them and saying, hey, we're Volkswagen. We want to have cobalt for the next 5 years, and we want to have price declines of 5% a year. Doesn't work. But there's a big cultural issue because Volkswagen and these companies have had very conservative value chains that they've worked with for 100 years. And now suddenly they have to deal with Glencore. And that's really tough for them. So it's not easy for these guys to change. And they're all running around and looking and seeing what they can do, and there's a bit of panic, but it's not clear really what their strategies are going forward.
Well, I think, I mean, it's a pity that the Western states don't have policies with regards to these strategic minerals. I think the US is waking up and starting to do that. I think one of the interesting things about our conversation, by the way, is that we've spoken almost exclusively about China and not about India or any other country. Yeah. And I do think that in this cycle, we will see the Indians being much more aggressive. I mean, the Indian economy is growing fast. I think you're going to start to see Indian companies doing more global mining M&A. I don't think they're going to be completely shut out of the story.
But then that goes to a very sort of interesting perspective from a sort of on the supply side. I mean, we're talking about the, you know, the bullishness on the demand side, but on the supply side, you know, if you look at the number of assets that are for sale, the number of assets that are potentially sort of acquirable, a lot of the mining juniors were consolidated in the last cycle. We now have a more aggressive India. We have China on the front foot. You know, this is going to lead, you know, is this going to lead to yet another sort of boom in the M&A space? You know, and how will the sort of incumbent players sort of respond to this? Is it just a situation that BHP or Rio or whomever, are we just in asset divestment road as the emerging markets accumulate these resources, or is there an alternative there from an investor perspective?
Well, I mean, I think, you know, there already is quite a lot of M&A. I think in terms of building for the cycle, we're probably too late. But I do think the cycle is going to be a much longer cycle for a number of reasons. First of all, as you mentioned, Paul, the time to bring a new mine to production is becoming elongated, and that means that the cycles are going to become more violent. Because it's like the shipping sector, except it's taking 20 years to build the new ships rather than 5. So I think that that's one point. And I also think in my personal view is that the rise of indexation in this cycle, which has been very significant for the last decade, and roughly $1.5 trillion has gone out of active management, fund management, into indexation, has meant that the new capital required to fund new build mines isn't really there. And that means that the cycle is going to be much longer before we get into the boom time. So I would contend, particularly for copper, the price has gone from, I don't know, $1.80, $2 to $3.20, $3. That's a rise, but it's nothing like, I think, what we might see as things get increasingly tight because of the combination of supply and demand. And what we haven't talked about on the supply side is the grade degradation, which means that you do need, I think, a new escondida every year just to keep the world supply in place.
I mean, I think that's, I would certainly agree with you. I mean, if you look at just the sort of numbers, if you take just a standard, or just the Wood Mackenzie, or any consultant, you just look at the supply base X investment, and what you see there is about a 3 to 4% depletion rate running through the copper industry. And admittedly, you've always had a 3 to 4% depletion rate. I mean, you've always had this issue. But then you sort of look at new demand applications. If you look at long-run copper demand, it almost invariably tracks global long-run GDP. Global long-run GDP growth in real terms since 1900 has been about 3 to 3.3%. You look at copper demand growth, it tracked that almost unerringly up until the 70s when you lost about 1%, essentially due to aluminium substitution, but thereafter 2 to 2.5%. But that gets you a net. Before we talk about electrification, EVs, before we talk about smart grid and distributed storage and photovoltaics and wind power, just on the normal industrial applications for existing sources of demand, you've got a 5% delta each and every year that you essentially need to supply. 5% on now 20 million ton per annum mined market. That's 1 million tons per annum to get steady state. That's an escondida each and every year, right? Now, if you add on electric vehicles to that, if you add on distributed storage, and then you start getting bullish about the demand side of this as well, that grade decline that you're talking about, asset life depletion, and so on and so forth, I mean, that's a significant amount of capital. And the question, I think you quite rightly, where's it coming from?
Well, in 1975, if you drilled 200 or 300 meters of 0.5% copper, you left it behind, pretty much. 1985, if you drilled 200 or 300 meters of 0.5 copper, you left it behind. In the 1990s, pretty much the same. So in the early 2000s, we as a group and a family, we wanted to invest in one of the largest deposits in the world. And we were told by smart geologists that Cobre Panama will be a mine. We looked, and many people said it won't be a mine. And we invested, and it was 0.5% copper, which they left behind. That is the future of this business. So to answer your question, if you're ABC Copper Corp, you have two choices. One, you go to the more exotic locations in the world. That's an option. The second option is to go to the grade, the 150 billion that this industry invested in exploration and development, or as I articulate to my friends in the oil business, the R&D of mining, which is exploration. We found a lot of 0.3, a lot of 0.4, but you didn't find a lot of 1% copper. Those days are gone. In 2010, the 15 largest producers ran 1.2% copper through their mills. 2016, it was 0.7, 0.72, and falling. But the future, those projects, which could be mines, because I believe demand will be strong. I believe so. I might be optimistic. And eventually the world will realize that we need more copper because the demand or the CAGR growth is there. Then we go to the table. It's 0.3 to 0.5% copper. So if you can imagine how this industry has changed and the lack of discovery, the lack of success. What was the biggest success story from the early 2000s to what is in production today? It's in Mongolia, and it's Oyu Tolgoi. They are now going to expand the deeps, and in about, what, 6 years, we will have the full potential of that operation.
But let's just sort of think about that. From the first dollar that Rio Tinto spent on, well, let's take it even further back, and let's go Ivanhoe, the first dollars that were spent on that, to then the open pit, to then the delays while we had this protracted discussion with the Mongolian government, to then the approval of the underground section, to then the construction of it, the development of it. Now it's going to sort of be ramping up in, as you say, X years' time. I mean, the IRR on that is not exactly a dripping roast, is it? I mean, this is the sort of problem that we've got. We have an extension of lead times in the real economy and a foreshortening of lead times in the financial economy. People want an instantaneous 20% return compounded per annum delivered today, and yet when we look at what you can actually deliver, and I think in the real economy, it takes many, many years, 5 years, 10 years, before you can start seeing a return on those kind of, on that kind of an essence. Is this actually, I I mean, philosophically, is this actually a sort of stable configuration for the industry? It feels to me that something quite fundamental has gone wrong here. But at the same time, that should give opportunities, I think quite significant opportunities for those that have a longer time horizon, essentially, than the market average, which is these days about 1 year.
But I don't think there's that much money around that does have a long time horizon. I think, time horizons in the public markets are becoming shorter. And I think as well, surprisingly for this part of the cycle, I think you're seeing actually less private equity than you would expect. And quite a few significant sovereign wealth funds are actually exiting the private equity business because they found the coordination of the cyclicality with their time horizon very difficult to manage, or they can't see opportunities to put the large amount of money that they need to move the needle on a $250 billion fund in the mining sector. So I think it's a very interesting moment where you're having, this demand increase, the supply, grade degradation, and actually not that much capital. And I think people who can will buy rather than build, but there's not that many objects to buy.
So I would think that the automobile manufacturers have no choice but to actually go into mining. There's just no way around it. And it actually makes it, the analogy I would use is in the solar space, which is silicon, right? That's the prime material for it. What happened with silicon 10 years ago was prices were at $150 a kilogram. And the big silicon manufacturers, what they did was they sold their supply out in long-term contracts and got prepayments.
Yeah.
Right. So if I was a miner today, I'd be going to BMW and saying, "You want cobalt? Then you're providing me the equity for this in return for a long-term contract." And I believe that they've no choice in this.
But don't they have a terrible track record? Didn't Ford try a long time ago to do something in palladium or platinum? It was a disaster.
They did, but be clear, this is really different now because palladium and whatever, that was for them not that critical. If you don't have cobalt in the next 6 years, you cannot bring an electric car onto the market because there is no choice. 5 years, you need cobalt. So what are you going to do? So I think there's a big change in the market.
Yeah.
Well, historically speaking, let's look back in time. The chemists and the scientists of this world have come up with incredible inventions. When World War II started, the Japanese had cornered the rubber market. So to make synthetic rubber, the American chemists were able to crack petroleum products to create synthetic rubbers. Now, if you had told people before, that would have been a daunting task. There are, and I'm going to say I don't have any scientific information, but I'm going to suggest to you there are millions of people working in the battery space, predominantly in Asia. And we've heard about the solid-state battery. We've heard about the vanadium redox battery. These are big, stupid, room-sized batteries. There's the iron-sulfur battery. I have people that I know that have made a lot of money in mining, and cobalt is important. It is rare. We all know the story. So they wanted to get involved in owning cobalt resources, and they sent a team of very smart geologists, and I would think they looked through pretty much what's going on in the world in cobalt. Their summary was, it's just geologically not there. So if you want to have this amount of batteries, whatever that number would be, whatever percent of transportation shall be electric, you're going to have to come up with something that dramatically reduces the amount of cobalt and or substitutes it altogether. Now, I'm not saying it's going to get substituted. What I will suggest to you is these millions of people working on various different chemistries and technologies within the battery space are going to come up with new, paramount inventions that change the game. It'll be like the invention of synthetic rubber.
But isn't that an interesting point, though, if you're talking again about the auto space, right? And you're being told to reorient what is, after all, hundreds of billions of dollars, if not trillions of dollars, of installed capital that is oriented to the production of a particular good. And you're being told by governments that you must restructure that entire manufacturing process. But then you're facing a raw material constraint against which the only sort of way out is the delivery of a promissory note about technological innovation that may or may not be delivered. Right? There's no guarantee, right, that if you're going to make this change, that someone can tell me in the future that you're going to be able to get a cobalt-free battery, right? I may hope that I can get it. I may be able to trying to reduce the loadings. But to make that kind of shift internally on the basis, as I say, of a technological promissory note that may not be honoured. I mean, that seems to me quite a daunting prospect for any kind of company, let alone one that you allude to with a sort of historically very conservative mindset. I mean, wouldn't that almost, the only way that you can de-risk that, to your point, is to backward integrate, is to actually physically go after those sources of supply and secure them yourself?
Well, I just go to just to talk about the cobalt thing, because the reason cobalt is there is because what it does is it prevents fires. And the automobiles are scared stiff that there's going to be a fire in one of their automobiles, right? This is, if you're BMW or Mercedes, that's the #1 concern. It's not price, it's that, right? We saw there was a Tesla fire a week ago. I mean, this is for BMW. That's, you know, CEOs gets fired for that. So they're very conservative. So even going to, you're reducing the amount of cobalt in the battery. They have what they call Six Sigma, which is their quality standards. It's going to take them many years, right? And so what I'm trying to say in cobalt is cobalt will stay there until they're 100% sure, and I use the word 100% sure that the next battery technology is safer than the cobalt-based battery. Right? Yeah. Now that said, be clear, in China today, what you've got is you do have batteries that don't have cobalt, and they're very they don't have the energy density or the power density for cars, but they're great for buses. They're great for stationary storage, and they're cheap as hell. Yeah. Okay. Yeah. Lithium iron phosphate.
Also in the energy storage business, I was in Portland a month ago, and I visited ESS Battery. I was there with Simon Moores of Benchmark Mineral Intelligence, so he could ask more pointed questions. This is a big, dumb iron salt battery. They build them in containers. But what they can do is build them in a warehouse next to a wind park or solar park. And it was incredible. When he talks about the installation of the battery, that's his secret sauce. Yes, the battery is pretty simple to build and he has unlimited supplies. When you talk about the cost curve, it cost him 6 cents a kilowatt hour. They're stable. So for the permitting and installation of this battery happens very quickly, very quickly. I found that to be incredible because of this factor of the stability of the lithium-ion battery. Now, this is not necessarily going to be used in cars, but it is, I believe, that the red herring here is the car. I believe that the prize is the storage, big, massive storage batteries. And they don't have to operate kilowatt for kilowatt. They just have to be there in case as you overbuild these things. But the key is you can now build solar for 3 cents a kilowatt hour. And if you can have the backup battery for 9 cents, that competes with anything. The question is the scale now, and that's what they're looking for. And the interesting thing with their investors are companies like BASF, oil and gas companies. They're really quite incredible. So I encourage everyone to stay current with batteries and do some research on the iron salt battery.
Well, maybe just to bring them back, I mean, all of this is hugely, I mean, you know, we see a demand function that is increasing, we see a supply side that's challenged, you know, we see a lack of investment in the space, we see, you know, dumb money, if I could call it that, exiting the market. But all of this creates a dynamic, obviously, where the supply-demand fundamentals for this commodity look incredibly bullish. I mean, our own numbers that we've put out there, we think the copper price peaks at $12,000 a ton in the next, say, 3 to 4 years. By $12,000 a ton, what is that? 2,204. So let's call that $5 a pound. That's what we've put out there. I'd be interested in getting your views on that before opening up if there are any questions. What's the peak and when do we get it?
But I think in the last cycle, didn't the copper price get to $4.50 roughly?
Exactly.
I think this is going to be a more violent cycle, both because of the lack of capital and the squeezed, demand and the longer cycle. So, it's obviously way above consensus pricing, but I think it's possible that we would see, $4.50, $5, which is not what people are actually planning on at all.
The question is why. So I speak with a lot of oil and gas people and a lot of energy people, and as I articulated before, they can't spell the word copper. They don't understand how it works. The world's oil supply comes from 4.5 million, actually 4,700,000 individual wells all over the world. Copper, 45% of primary copper comes from 20 mines. 20 mines. The average discovery year of these mines, which we all know, it's been very well publicized, is about 1928, 1930. Haven't found any new things. So you talk about 12,000 a ton. So the project profile, we already talked about that. 2 choices for ABC Copper Corp. Go to exotic locations or mine 0.3 to 0.5 copper. Let's use 0.4. Today on the LME, copper trades at $6,800 a ton. 1% copper ore, your ton of ore is worth $68. 68. But that's not the future. The future is 0.5. Your ton of ore is worth $34 today. 34. TCs, RCs, some penalties, you're going to get 28 in here in the pocket. You have to, mining costs, if you're lucky, which we're not, because all the good locations are gone, you have to go 4,000 meters in elevation, 300 kilometers from port. Mining costs, $10. If you're underground, 16, 17, 18. Processing costs, $10. Oh, what about the IRR? If it's a small project, you need 30%. If it's a big company, you need 20. You need about $40 a ton just to even, don't waste your money on a feasibility study. Don't go there. You don't need to do that. $40 a ton is what you need for that ton of ore, which tells me if I reverse engineer things, because there's no banker in the world, when I get my $40 a ton, it's not the will. Lots of that in Lima, in Santiago. It's the money. You need to have a margin of safety. We've seen these cycles go up and down. So it tells me that 0.4 copper ore has to be worth about $50 a ton, thereabouts, más o menos, as they say in Spanish, which drives you to something around 12,000 a ton.
Yep.
It's the economics. And that's unique to this commodity, unlike the monolithic group. If you look at a chart, take any 10 hard commodities of your choice, start in 2000, oil is the driver, it peaks. Everything peaks with oil, top, bottom, and that's decoupling now. Because if you look at that correlation, and I'll show it to you after in my presentation, copper is going to have to exceed its old all-time high and go somewhere in that $5 to $6 range. Correlate that to the moves up and down with oil, that would be like having $160 to $200 a barrel oil. Any commodity that achieves or surpasses its old all-time high usually would end up in some kind of a euphoric atmosphere for that commodity with global investors, because it tends to be on page 1 of many publications. So I think if there was a race of all the commodities, which commodity is going to go through its old all-time high, of the big bulk ones I'm talking about, gold, copper, oil, and what have you, I'm thinking copper has a shot to win the gold medal there. It probably should surpass its old all-time high, and not in the year 2025. It's going to happen, I think, sooner than many people would anticipate.
Brilliant. Well, thank you very much. Just like to say thank you to all the panelists for joining us on that discussion. Are there any questions from the audience before we wrap up?
Thank you very much, gentlemen. I'm shaking in my pants at the moment because of the future predicted by Gianni and Gerard. If what we're looking at is a revolution in transport, which is going to, the word I think, exponentially increase demand, and at the same time, as Julian was pointing out, and Gerard, you've got the automotive manufacturers who are living in the present or the past, actually, and you've got the banks that are looking for IRRs and near-term return. It seems to me that what the result is going to be is something that we have not seen before in a metal since nickel in 1969. This, for copper, could be one of the most dramatic things that we will see in our lifetime. Is there anybody that can top that?
I find it hard to. I think that's a précis. I mean, it's an intersection, as you say, of supply, which is constrained, demand, which is bullish, and the funding of new supply, which just isn't there.
Substitution is the derailer. So people should understand, obviously, that's clear. So what is the substitutor of copper? What has been for 40 years? Aluminium. Aluminium. My first 10,000 hours of experience was in power systems. And I was at my brother's house about 3 weeks ago. My brother still does it. We both went to the British Columbia Institute of Technology. And I asked him to do me a favor. I said, can you bring home a piece of 500 MCM copper cable so I can take a picture? 500 MCM cable is 45 millimeters thick. It's made of copper. And you can flex it like this. Why? because they use super tiny strands and they bundle them and bundle them and bundle them. And you're able to very manipulate it in tight locations, like a wind turbine, like any backup battery system. And it's very dense for amperage, high amperage. You cannot substitute aluminum for this. And when you look at the connection points, which the Chinese did use in the past with failures, it is possible. And we will use aluminum in many, many applications, but in not all applications. It is the one substituter for copper. Of course, gold and silver, but they're too expensive. And if you look at the correlation, price correlation, it's important to follow aluminum because the ratio is 3 to 1 to 4 to 1. If that goes out of whack, you have a heavy financial incentive to use aluminum. So if we see this relationship maintained, it takes away the financial incentive, let alone the application, because you get killed on the labor when you start substituting also with the inferior aluminum products. Try welding aluminum bus bar in a substation, and so on and so forth. So that is the substitutor. If they come up with something new that can dramatically use copper on distribution and what have you, that's a concern, Rod, I think. But not aluminum, in my opinion, because of the price.
Yeah, if I can interject again, the point is not the philosophy. The point is doing something about it. And Gianni, although he's a great talker, is actually doing something about it, and he's integrating. He's putting through M&A a number of 0.3 and 0.4 projects together. He did one last night, so he's not just sitting on a platform. I mean,
that's a great plug. Thank you.
Marxism, the weakness in Marxism was that there weren't enough people to deliver. There are not enough people to deliver today in the mining industry to bring in the copper, to bring in the cobalt. And this is why you're looking at 12 years and 16 years, and that's why Julian can't get his rate of return. I mean, you need a bloody revolution in the mining industry. That's what you need. And it needs to come from the younger generation, and they're not delivering. I better shut up or I'll get emotional.
I mean, I think the human capital element is very important, and I think the sector has suffered from a depletion of talent, which will also be another factor. I mean, we've also got, blockchain, where things are sourced from. I mean, there are many factors which are going to increase the squeeze, and I think it will be somewhat sector-wide. I mean, I wonder whether this carbon dioxide shortage is sort of beginning of what might happen to the broader economy when the minerals sector has issues. And I think hopefully that will lead in due course to a better appreciation and valuation of our sector, which, by the way, only accounts for 1.5% of the total market cap. And I think that's going to be reassessed.
It's a point we've made in our research that if you really want to accelerate supply in the mining industry, put the mining industry on the same cost of capital as Facebook. Right? If you put that multiple on Rio Tinto, then suddenly all of these problems disappear. But until we get that kind of shift in people's perceptions, but it will happen. I mean, it used to be the case that we understood the reality of economic growth. Since the 1980s, we seem to have thought that we can forego all of that, but I think it's coming back. Anyway, I think we've run out of time, so thank you very much again